What is up, guys, and welcome back to another video. Today we have a very important breakdown covering my portfolio. We're going to be going over how my portfolio has done in the last few weeks and months. We're also going to go ahead and jump into every single holding that I hold within both my taxable brokerage account and my Roth IRA, break those down, give you guys a small thesis behind why I own these stocks, where I expect them to go in the future, and what we are currently looking at in this state of each investment. So before I do get into this video, make sure you guys do click the link in the description down below. Join up on our free Discord where we have multitudes of charts, premium wins, premium reviews, everything that y'all need to check out before going ahead and jumping into premium itself. Make sure you guys do jump over there, 100% free. Link for that is going to be in the description. And as well as that, make sure you guys do like and subscribe. It really does help the account here as I am working to make my return to YouTube and the Discord as a whole. But let's stop yapping and get into this video. Jumping over and taking a look at my taxable brokerage account over here on Robinhood, you guys can see that my account balance is currently sitting at $46,812. And yesterday's after hour session, we did see a large sell off in most stocks, coming after a downgrade from Moody. So you guys can see that I'm down around $2,000, but we actually still finished the day up yesterday around $700. So let's go ahead and take a look at how the week and month has been for me. So last week I made around $4,000, up around 10% of my account. Really nice week. And moving over to the month, we saw one of our better months in the portfolio here, up around $17,000 from those April lows. And that is going to result in around 57% of my account here. So you guys can see that is a really nice bounce back, especially when we go to the year to date. And I can show you guys a few things. So we were down at one point around $10,000, down around 26% in this account. And it looks like we've worked our way almost all the way back up around 22.82% right now. And we're approaching all-time highs. We were much closer yesterday before that after-hour sell-off, but we are still targeting that $50,770 range, which is going to be our all-time high mark in this portfolio. I think something like this can happen very, very soon. I do expect a mild sell-off to come, and I do think that we could see a little bit stronger of a sell-off if some things are to happen. But I am still going to play the fortunate card with the market right now and expect a little bit higher returns to come. And I do expect to break all-time highs within the next few months here. So I like the way everything is shaping up. I'm really liking how well we did holding on to these stocks and buying the dip. And that is going to really, really be shown when I do show you guys what my holdings are now comparatively to the last time that I made a video like this. So let's go ahead and jump into each one of my holdings individually and break these down. Jumping into my first holding here, we are going to have VUG, and this is going to be my market tracking ETF. I like this ETF because it has just a little bit more volatility than the S&P 500, but a lot of these same securities and companies within them. So I like this for my first holding here, and I do want to keep building this as I have just started this position. I only have a market value of around $1,000, but I am buying $10 every single day in this position, and currently we're already up around 9% for a return of around $71, which by any means is nothing special, but it is something, and that is going to get us started with this position as I do look to grow this over time. And you guys can see we only have around 2 shares, but looking over the next 10, 20, 30 years as I do grow this position, this should become one of my larger positions within my portfolio and really be a mainstay for years to come. Jumping into the second holding within my portfolio, we're going to be taking a look at him and hers. Now, this is not only my favorite position within my portfolio, but is also the largest and best performing position within my portfolio. So let's go ahead and break this down. As you guys can see, HIMS is up around 132% in the past month alone, which is just insane to see. And year to date, this company is now up around 150%. Once again, absolutely insane to see. One of the better stocks on the market currently. Jumping into my holding right here, we have around 260 shares for a market value of around $15,833, with my average cost sitting at around $29.24. When we did see this April low come down to around $25, $27, I did go ahead and scoop up a lot of shares all the way up to around that $34 range, and that is why my average cost got brought up, which I am not mad at whatsoever. And obviously I'm not mad because we can go ahead and take a look at this return, which shows a $8,300 return or around 110%. Obviously, this company has been absolutely working for me, and I love this thing very, very dearly. Like I said, I expect this company to run up to that triple digit mark by the end of this year. And once again, it really could happen in the next 2 to 3 weeks with the way that this thing is moving. Obviously, I expect a pullback to come soon. It's not very healthy for a stock to run 200, 300% within a few weeks, but things have happened before. It gets crazier. Another thing I want to look at is their market cap right here, sitting at $14.47 billion. I think that there is a lot of room to grow right here. And there is a lot of great things to look at. Something like this, where you can go ahead and take a look at Palantir chilling at almost a $200 billion market cap, and they're bringing in about $200 million more than HIMS, which really, in the grand scheme of things, when we're talking about billions and billions of dollars, is almost nothing. To see that company be damn near 10x what HIMS is, actually more than 10x what HIMS is just a little bit crazy to me. This company is probably worth north of $125 as today sits. And with the way that things are growing, I expect this company to see $200 to $300 to $400 by the end of the decade. So that gives me a lot of conviction behind this trade. And obviously, I'm a big fan of HIMS, just looking at that total return. But I also love what they are doing on the management side of things. The chart has been absolutely beautiful. Everything looks great within this company. So if you guys are holding this name, once again, just sit on it. Thank everything that you have that you got into this name when you did. And if you guys have one of those average costs of around $15, promise me one thing, that you guys will never sell this position, because this thing is going to absolutely retire families. Taking a look at my third holding here, we're going to have Oscar Health. And if you guys have been around the channel at all, you guys will know that I am a big advocate of Oscar Health. It is my top stock pick for 2025, as I do expect this company to absolutely go crazy in the second half of this year into the first half of next year. And I do expect this stock to see around $50 to $60 within the next 12 to 18 months. Now, going ahead and looking here, we are up around 40% on the month here. And that brings us up around 22.55% year to date. And as you guys can see here, I have around 600 shares of Oscar for a market value of around $10,086, with my average cost currently sitting at around $14.87. I'm really liking the way that this position is shaping up. I wish I could have gotten more shares at a lower price when it was down sitting around $12, but I had some other things to buy with HIMS, Hood, ASTS, and a few other names we'll talk about. But nonetheless, we're still up around 13% on this position for a return of around $1,153. Now, I'm looking to have another Oscar video coming out at the end of this week, so make sure you guys do stay tuned and check that out. Jumping into our next holding here, we're going to have Robinhood Markets. Now, I really like the way that Robinhood has grown over the last 8 to 12 months, as we have seen new things like a brand new desktop feature, being able to trade futures, new cryptos, stuff like Trump Coin, which, although I'm not an advocate for Trump Coin, I really do like the way that those new cryptos are bringing money to, and also customers to, their app, so they are able to trade those cryptos. Other things like being able to bet on rate cuts and the NBA playoffs. So a lot of stuff like that is really going to help them, disperse their revenue streams, and which in return we have seen in past and present earnings has actually boosted their numbers a little bit. And we have seen better numbers in revenue, net income, free cash flow, and all important metrics like that. But taking a look at the chart here, we are up around 53% year to date, and that brings Robinhood's current price to around $59. Currently, I have around 180 shares of Robinhood at an average price of $42.52 for a market value of around $10,500. And currently, I'm up around 40% on this position for a return of around $3,000. One of the better returns that I've seen within my portfolio currently, and I do expect this name to continue to climb up to those triple digits. Currently sitting at a $54 billion market cap. I think that we can see this thing run to around $100 billion in market cap by mid 2026, late 2026. I expect this thing to do another 100% within the next 12 to 18 months. And I'm very confident within that, as we have seen their growth in the last 8 months alone been absolutely stellar. So once they do continue to refine all of these new features that they've had, I think that things will only get better. They will only bring in more customers and in return, more money within their app. So that is going to be Robinhood. And let's go ahead and jump into our next stock on the list. Jumping into the next stock on the list, we're going to have ASTS, which is one of my newer positions within my portfolio. And I did go ahead and recently add quite heavy, adding around 80 shares at around 27.50, which actually brought up my average cost. So we're not looking too great right now, being down around $210 for around 4%. But going ahead and looking at Friday morning, it was up around 6%. So we were actually up on this name. So I'm not very worried. This thing is quite volatile. So I do expect good things to come in the future, as we have seen good things with their numbers and growth. Although they aren't profitable yet, their numbers are looking good for the future, and I like the way that things are starting to stack up. And on top of that, we have seen a lot of shares get scooped up by not only hedge funds, but insiders recently. So that is giving me a lot of conviction that there is something going right within this company. And that is also made true by a lot of these hedge funds giving them out absolutely outrageous price targets. I've seen price targets up to around $650 on Motley Fool from an actual financial advisor over there. So if they're seeing something and I like the company, I'm going to go ahead and jump into this. I personally like what is going on, and it seems like hedge funds and insiders are also liking what is going on. So that gives me some good confidence behind my trade, although I am down around $210 on this name. I do expect it to see, 50 to 60 to $75 coming in the next 12 to 18 months, and then maybe, $600 by whenever we're apparently supposed to see $600, which I don't think is going to happen. But this name is obviously quite new, being up around 841% in the last year and around 161% in the last 5 years after seeing a nice drawdown to around $2. We saw a lot of good stuff come in with this company. But that is it from ASTS. Let's go ahead and jump into our next stock. We're going to briefly run over these next two positions here as I did just start these positions last week. I went ahead and grabbed some AMD at an average price of around $120. We're currently down around 5% on this position, and we only have around $1,700 in here, so nothing too crazy. But I do think that AMD is going to see a lot of bullish inflow over the next couple of months into years. And I do expect this name to see $200 by the end of this year and something like $300, $350 by the end of next year. So I do have a lot of conviction within AMD, and I expect this name to return to norm as it is very undervalued currently. Much of the same with Google here. Google is actually the cheapest Mag 7 stock from a PE ratio, which is a metric that I like to use. So that is going to tell me that this company is very undervalued and we can see a lot of good growth coming out of it. But once again, brand new position, only have around 11 shares for a market value of around $1,800. I'm up an insane $6.36 right now. So I'm thinking about buying a Lambo and retiring my family, of course. But that is going to be my small position within Google and AMD. Let's go ahead and jump into the Roth IRA side of things. Jumping into my Roth IRA here, you guys can see that we're currently sitting at around $7,700. We were up around $300 today before overnight took us down around 150. Split it in half, but at the end of the day, it's pretty good. We actually got a nice little call option in on UNH, made around $150 on that. So you know what? I'll take it. Even though it was in the Roth, definitely didn't mean to do it, but I did it at the end of the day, so who cares? We're up around $681 on the week, up around 10%. And that puts us up around 18% on the month, up around $1,200. So we have seen a nice little return in the Roth recently. And I do want to quickly go over my Oscar holding right here. I do have this Oscar $20 call for January 16th of 2026. Now, once again, like I said, I expect Oscar to see around $50 by the end of this year. So let's go ahead and plug that number in. And you guys can see that that is a 1,000% return and around a $2,700 return within this single call alone. I want to keep adding to this as we do see some more dips. I only have one contract as of now, but I do want to get up to around 2 to 3 contracts. Don't push it too heavy, but keep that there for a nice little keepsake. Hopefully, we'll see a good return from that. My next stock here is going to be Dutch Bros here, where I do have around 45 shares at an average cost of around $71. I like what this company is doing. They're looking to open another 1,000 shops in the next 2 years. They currently have around 1,200 shops, so they're looking to almost double the amount of stores that they have open. They're also doing new things like adding hot food to their menu and other things like starting to sell in retail stores. Stuff like maybe a price chopper, you walk in, grab a Dutch Bros drink, much like the same that you would do with those glass cans of Starbucks. This is a lot of good things that you can see out of a company that has turned profitable, and now they're finding new ways to generate revenue, income, and other things like cash flow. So I really do like Dutch Bros. I think that is a really good company to, kind of build a position in for the future here, kind of like a mini Starbucks. So my next stock here is going to be VUG and SCHD. We saw VUG, I only have around a share and a half, so nothing too special there. But SCHD here, we have an insane return of around $10.08. Obviously, just stellar right there. I have around 19 shares at an average cost of $25.92. This is going to be my dividend payer within this account. I'm investing $7.50 every single day into this position, and I expect this to grow over time. Once again, it's a retirement account, so I'm not trying to kill it today. I'm trying to kill it over the next 10 to 20 to 30 years. Also going ahead and taking a look at Nvidia here, we saw a nice little gain of around 20%, up around $380 over the last few weeks as I have started this new position within Nvidia. I have around 17 and a half shares at an average cost around $110. So I'm actually very, very happy with that average cost, as it is all the way back up to around $132 right now. And as you guys know, this name could be, it could be worth another $2,000 in 2 years because we know how Nvidia runs. And it looks like we could see a nice little breakout coming as Nvidia is actually kind of flat over the year. Yes, of course, it's up 40%, but once you take this out, it is pretty much flat right here. So I am expecting Nvidia to see a next leg higher, much like something that we saw right here where we were kind of flat and then we saw an absolute impulse move. I expect something of the same to come out of this. So that is just definitely something to keep your eyes on. I'm obviously a big fan of Nvidia, as is everybody. We know what this company does and we know where this company is headed. And that really is a very simple answer, which is up. This company is headed up. So definitely something good to look at there. But that is going to be my Roth IRA here, where I'm holding that Oscar Call, Dutch Bros, VUG, SCHD, and Nvidia. All right, guys, that is going to go ahead and wrap it up for me in this video. Make sure you guys do click that link in the description down below. Join up on our free Discord. Make sure you guys also do drop a like and subscribe. And let me know down in the comments down below what kind of positions you guys would look to add to a portfolio like this, what kind of positions you guys maybe hold within your portfolio, or anything else in between that. I'd really like to hear what you guys have to say. And I do make sure that I reply to every single comment. So make sure you guys do get in that comment section and let me know down there. But other than that, I will see you guys in the next video.